Recording is on.
So, Lisa, I try again another mic. Just tell me if you hear me.
Yeah. I can hear you now.
Do you hear me now?
Mm-hmm.
Yes?
Yes.
Is it better?
It's okay. I mean, at least we can hear you. That's already a good sign. Rahim, are you sharing the screen or who's sharing the screen?
No? Yeah, interesting.
Okay, good now. I spot a cute doggy.
That's a kind of whiteboard sharing or activated whiteboard, I think.
Yeah. No, now it's fine for me. Okay, I'm ready whenever you are. Then I will just say quick words of welcome and then the floor will be yours. Are you
Is
ready?
it possible to remove this whiteboard?
I don't see it anymore.
Oh, okay. Interesting.
Okay, but anyways, you get settled in. So, welcome everybody to our second webinar of this year. We had a webinar on paper Bitcoin back in March. I think it was a very lively discussion. So, we have decided to do one webinar a month. So, whenever you also want to share an input, you can reach out to me or fill out the form that I shared in both Telegram groups. If you feel like you have a good topic that you would like to discuss, then that would be great. Okay, perfect, like that. All right, tonight we have Rahim talking about what Bitcoiners get wrong about Bitcoin. So I'm already very excited what it is going to be about, what I might get wrong about Bitcoin. Being an educator myself, it's always good to learn. I mean, Rahim, maybe you can then also share a few words on whether you want to be interrupted mid-speech or whether there is a dedicated Q&A session in the end so that we know a bit what to expect. And yeah, just enjoy the webinar, ask some questions, make it a lively discussion because you showed up for a reason. All right, Rahim, over to you.
Okay, thank you very much. I really usually like the seminar format, so please feel free to interrupt me anytime you like if I feel that it's going down too long a road. I tell you and cut my answer short. Yeah, don't be afraid to start the discussion as early as you like. Because anyway, I'm always speaking quite spontaneously, and it was quite spontaneous idea.
Yeah.
And then I'm happy so many people showed up because I only said yes to it because I know that my kids are watching soccer tonight. So I'm free. I'm free, but it's the beginning of the holidays. So thanks for being around. Yeah, the topic sounds a bit like an economist wanting to explain to you how to fix Bitcoin. And it's not what I'm going to do because I've seen that since I've been watching Bitcoin every year. Another economist comes around and tells you what's broken about Bitcoin and how to fix it. Usually by people who haven't taken the time to study it a little bit, at least, about Bitcoin. But I've been observing Bitcoin for quite a while, and I still think there are some takes that explain, on the one hand, why economists had a hard time, they still have a hard time understanding Bitcoin. But of course, economics is not all bullshit. It's mostly bullshit, but not all is bullshit. I think there's one tradition that is also not entirely free from bullshit, but at least in some regards useful. And I think it's a good idea to engage with the ideas of this tradition. And that's, of course, the tradition of Austrian economics, as we have this Bitcoin Association, I would like to call it the Swiss Austrian Economics or the Swiss Austrian School of Economics, because I think there's a quite important Swiss branch of that tradition that was quite practice oriented. And within that tradition, I see Bitcoin as a kind of practical implementation of some ideas of the Austrian school. Um, you may know that the economist Hayek seems to have been the most prophetic one about Bitcoin when he said he thinks like the only way to have a separation from money and state would be to have a sly and roundabout way. Uh, and I think I've realized that even to the surprise of Hayek, this sly and roundabout way was it in hiding something in plain sight. I think it's by calling Bitcoin money from its beginnings, it was hiding it from economists because it seemed obviously true that Bitcoin is no money. And even to an Austrian economist, it seemed like that. And I want to start here and trying to convey a bit the idea and difficulty of money and what's so difficult about Bitcoin. So mainstream economics likes to define money as the universal medium of exchange, which doesn't make too much sense because like either something is universal or not, but what does it mean to be universal? Like when does something count as universal? We know we have lots of small currencies, but more interestingly, and for anyone who has an interest in practice of economics, is like there is a whole range of monetary phenomena that are not linked to currencies. Obviously, that's the whole field of investment, is trying to put your money into something that's probably better money or a better form of saving than just keeping it in the things that are called money. So I find that definition not very useful. But as a kind of end result, yes. And the Austrian School of Economics was, I think, the only tradition that really understood that it's the end result of a process. It's maybe an end result. Sometimes it's an end result. Sometimes something can be quite universally accepted for exchange. That's that the indirect exchange, and that, of course, is the power of money and its network effect. But more interesting for the realist economist is this gradual process. And that, of course, is the reason why the Austrian economist is maybe a bit friendlier to Bitcoin. But still, there was the challenge when it appeared on the scene. It was obviously, it had no monetary attributes whatsoever. I mean, it was so far away from universal acceptance, like no one knew about the thing, and those who knew about it couldn't quite explain it. So that's challenging. But still, if we look at it today, of course, and almost every economist you'd ask will tell you where it's very far away from being a universal medium of exchange. And we have to be honest. Yeah, sure. It still seems, I mean, if you need to educate people about something, it's usually a sign that it's not a medium of exchange yet. It's maybe an interesting asset, and that's an asset you want to tell people about. But this kind of linking people that don't trust each other yet, which is one crucial thing, and I talk more about that soon, is missing if you don't have a shared reference frame yet around that monetary thing. Uh, Hayek again had, I think, a crucial insight in that he realized when we call something money, probably the term is not the right one, that money isn't really a thing. As in economics, we have a lot of invisible phenomena that are very difficult to grasp. They are subjective, they are dynamic, they are linked to human action. And money, in the same way, is more of a characteristic, a set of characteristics or an attribute. That I find the best way to understand money is by calling it moneyness of something. And Karl Menger, the founder of the Austrian school, called this moneyness the saleability or marketability of an asset. And of course, if we look at an attribute, it's much more easier to understand that it's a process of discovery. That's another crucial insight, that money, like language, is something that emerges out of a bottom-up process of discovery by people who want to communicate with other people, and they cannot set the terms. They can't define the terms. They have, in a way, to accept and find out what will bring this mutual understanding and what will make this mutual communication possible. And the same is with the communication of value. So it's a bit of a humbling approach. Um, and of course, it's a discovery process. Now, most Bitcoiners, if you ask them what's Bitcoin, they will tell you it's better money, it's sound money. Some have a lot of conviction and tell you it's the perfect money, it's the only just money, and so on. And from the point of view of the economist, you'd say here is not that cannot be true. In the tradition of economics, that was non-normative and realist. So what the Austrian school tried to do is to describe reality as it is, not how we would like to see it. So, and of course, that would be an immediate misunderstanding if you say Bitcoin is perfect money, and someone from this realist tradition will look at you askance and say, well, no, it is not. You may like it to be, you may prefer a world, and then we can discuss attributes. And of course, one crucial thing that Bitcoin promised to solve, and it emerged in the big financial crisis, is this kind of moral hazard of people that are able to manipulate currency and value by just creating more of something. And creating more of something to bail out banks. That was the big impulse for the creation of Bitcoin. I think was this perceived injustice of money creation, which of course is very far away from the realist tradition of the Austrian school. Not because it's utopian, it's just because it has always been describing these effects of mistaking protocols of communication with something you could top down improve or change or set or define. And most of the economics traditions from mercantilism and its predecessors and the schools of thoughts afterwards, it has always been a kind of engineering or trying to copy the power of engineering by shaping institutions the way to make them better, but usually it means to make them a better fit for interest groups that are ready to master the resources, the eloquency, the efforts to turn people's heads and basically have the power to shape institutions as they see fit. With protocols of communication that are there to increase mutual understanding and benefit and win-win relationships, fortunately, you can't entirely define away this reality, because if you shape them in a different way, they make impossible what is the main result that you expect. So if you define a language top down, you may find out it may be the perfect language for your thought model and system, but it may be a language that's so perfect that you will have no communication and no one will be able to learn it and use it, and it'll take a lot of effort. And while you're doing this effort, you'd realize that somehow people shift away from you and stop communicating with you because you're really a pain in the ass. Like, you want to prescribe the worst to other people. It's really not fun to talk to you. So of course, the more power you have, the more you'll be eager to use the power to get your way. But fortunately, you cannot fake stuff with power. Power has a price. Coercion has a price. It will reduce even more the communication. Of course, if you force people to communicate in your perfect language, they'll disappear, they'll wither away, and there'll be no one left to communicate with. And the very same thing with money. That was the big initial optimism of the Austrian school, that you cannot entirely change economic law by coercive law, by legislation. But of course, you can ruin a lot of wealth and a lot of mutual communication and a lot of mutual win-win. Um, but also, of course, the danger is in utopian thought that you think you figured out a perfect system and perfect way and want to impose that top down without yet understanding crucial elements of what makes that possible, because a lot of it depends on how other people assess it. Um, and of course, you can always consider other people brainwashed, but they have some needs and are learning as they go along from other people and from their own experience. And so with this realist perspective, of course, Bitcoin was an impressive story. But if you start from the utopian perspective, it's either you promise too much or you're already disappointed and move away from it. So I think from the right economic point of view, that's one of the issues I think as Bitcoin could have. And I think in a very paradoxical way, it helped the adoption of Bitcoin, because for everyone who had a basic understanding of economics, the white paper seemed very interesting technology-wise, but in economics, it just seemed wrong. You cannot define a peer-to-peer money just by putting it up for grabs. And even if this attribute of limiting, but in a sense, it's not only the limitation, it's remove the arbitrariness of money creation. That's a very sound point. There you can see the inspiration of the learnings of the Austrian school. But of course, it's not just the quantity. So the quantity and the scarcity alone are overrated usually, because all of economics is subjective. So there are lots of very scarce things that have no value whatsoever. So thinking that like Bitcoin is already perfect money because it is scarce, it has this limitation, is from the economic point of view wrong. That's not how it works. Scarcity alone is not enough. But it has one attribute that, in particular, Ludwig von Mises realized, building on Menger, is usually if demand increases for something, and that's the thing you can really predict, unfortunately. If demand increases for something, then production will follow suit usually. It's like more people want it, you want to produce more of it. And if you produce more of it, your economies of scale go up. It means the cost of production per unit goes down. That's the marginal economies of scale. But there are some very unusual products where you cannot have these economies of scale because for whatever reason, the marginal cost of production goes up or just doesn't go down. And gold is one of these examples. And the reason that gold has it's not so much the scarcity of gold that's that relevant. It's increasing marginal cost of production. And the increasing marginal cost of production has geological reasons for gold. It's that the way it is distributed in the surface crust of the earth is so that the surface gold is easy to find. And then because also of its physical attributes, it can be retained for endless times. Basically, it doesn't corrode. So more of it will be hidden in deeper layers. But that, of course, will always mean increased cost of production. It's not something alchemy hasn't worked yet, or not with a reasonable input amount of energy and other resources. So usually finding more than the surface layer of gold that's already there on the market, that's everything is easy to find, means to go for deeper mining, which is costly. And the deeper you want to go, the costlier it gets. So for any new gold that comes to the market, the marginal cost of production is higher, and it has to compete with the supply of gold that's already there. And that changes its whole economic attribute from a typical resource. A typical resource is like then, well, lots of people realize it's important. the production goes up, economies of scale go up a lot, and then it's basically it's this lever, this supply decides its value relative, or its price, let's say, is decided by supply. Um, with gold, the flow, the new production, because it's limited through these geological reasons, is relatively small compared to the supply that cannot be consumed that easily, because gold does not change when it's consumed. It does not react with other elements. It is pure. So the gold that was mined in Roman times and before is still the same gold. It still has the same attributes. It can be molted, reused again. So the flow of gold is relatively small compared to the big supply of gold that's around. And it's economists call the stock to flow ratio, which is quite unique. So some properties or some elements have a uniqueness in the sense that they don't behave like resources and they don't behave like products on the market. But the more important thing is, of course, on the demand side, because you could still have these attributes and no one would care about it, or no one would know about it and demand it. And that, of course, is an issue with Bitcoin. Now, a bit surprising, and it was surprising to me, is to understand this initial demand for Bitcoin. Because unfortunately, you cannot, in a sense, have your cake and eat it, or see a kind of virtuous circle that you demand something because it's already perfect money, and thus it becomes perfect money because everyone demands it because they realize it's just the best money. That from the realist economist's point of view is not that likely. It's not entirely impossible, but that's what Mises meant when he wrote about regression theory. That he thought the challenge is if you cannot construct a regression from where this demand could come from, it'll be a bit in the air. It's like, we want Bitcoin as long as it's the perfect thing. And if it's not the perfect thing, then it's not Bitcoin. Then we need to like have a Bitcoin 2.0 or 3.0. And that, of course, has been a bit the story of Bitcoin adoption. A lot of people like falling away from it or have very high expectations, in the sense they think just by demanding, thus holding Bitcoin, we already have the perfect money. And now just the world has to see it. And we're waiting for it, for that to happen. That's not how Bitcoin initially got the traction and surpassed the one challenge I had, or the one problem I had with Bitcoin initially. It was not only that it was already called money, which gave away in a sense that there was an economic error at base. If, of course, you could interpret it in a different way, the white paper, but the way it's mentioned, it seems like an economic error. But the much more crucial thing was when I learned a bit too early about Bitcoin, and the way I learned about it was mainly as this kind of libertarian internet money. So I learned about it through US libertarians that were quite early in engaging with it. That was really the early days of Bitcoin, the first people that liked the idea of the separation of money and state, and thought, yeah, finally we have this kind of libertarian internet money. Let's use it. It's fantastic. We got to educate the world about it. It was not that many people. It was a few people, and they seemed a bit too homogeneous for my perception what money is. So that's the crucial paradoxon. Money, and of course, the white paper also has that or hints at it. Money you use when you don't trust. That's also the biggest issue with alternative money so far. So, of course, there were lots of people who were unhappy about the monetary system and had great ideas about alternative money, but it always failed with all these exchange circles and circular economies. Of course, circular economies have been around for a long time. In Switzerland, there are famous experiments in communities that used alternative money for circular economies for a long, long time. There's a famous experiment in Tyrol and in Austria. And all around the world, there were these kind of alternative things, and some were digital and some were physical and printed. And the issue with that is if you are within a group of people you can trust anyway with a kind of new money that you've produced yourself, then you don't need money. Then you can just write it on a ledger. Then it's like how in a family you wouldn't need money. It's like people that are so ideologically aligned with you that they say, okay, you're one of us. We use the good money because we're the good people. Is very challenging because it circumscribes the group of people to a homogeneous set. And I knew from Austrian economics that's probably not going to be money. The main function of money is to allow foreigners that don't trust each other, that don't share anything, probably even mistrust they share, to be able to communicate value. Um, and that has been the crucial challenge so far. Now, so that was my initial rejection of Bitcoin. I had a lot of sympathy, but I knew for the reason it would not pass on as money. It would not breach these ideological barriers. Of course, I was wrong about that, but not because the economics is wrong about it. And now something very paradoxical happened. So in economics, that's the interesting thing. You can have wrong ideas, but it doesn't mean that the results are wrong. And you can have good ideas, and it doesn't mean that the results are good. That's the complexity of the world. So you can sometimes, if you are wrong for the right reason and right for the wrong reason, that somehow cancels itself out. So I think in a way, by being wrong with Bitcoin and claiming that it's money already, it achieved exactly the thing of the slide and the roundabout way. It was hiding in plain sight. It made it so obvious to all economists that you can't just ignore it. It's not because if it would have started as a kind of a new asset, it will already be like, oh, it's a financial digital thing, probably a scam. But by being so utopian and outspoken, every economist and every investor would say, come on, it's another of these alternative money circular economy experiments for libertarians. Come on, what's the harm in it? It's no harm. We can ignore it safely. It'll never pass on. So I think in a way it was positive. And again, this ideological linkage, which you still have, and it's a crucial element. It explains a bit the initial adoption. So the initial adoption of Bitcoin, and still we are still in the early phase. We are still early. The initial adoption is not so much about the moneyness. So that's not true. To assume that people adopt Bitcoin because it's the better money. They adopt Bitcoin because it represents ideas of what a better money and society could look like, much more so than adopting it because they want to solve a medium of exchange problem. That would mean, okay, I really want to buy something, but I can't. I really want to invest in your company, but I can't. Usually it's for most people, of course, there are these use cases that are monetary already, and I've experienced some of that, but I've only experienced them because I had like a very long time and a lot of potential exchange situations, but they are rare, they are scarce. Like 9 out of 10 or more, 95 out of 100, or 99 out of 100 even, it's more friction. It's like you take the extra mile, you do it because you want to pass on something, you like the idea. It's not the immediate, it's not like the cheaper sale. It's not you get something for cheaper. Rarely ever. It's like it feels you pay more, but you like to pay more because you like the idea, you like it to pass on. And for the people that receive it, it's like you have to convince them. It's the extra step, it's the friction, it's the complicated thing. Oh, let me help you. I'm gonna onboard you. I'll make it easy for you. It's not like, of course, I'll take that thing because it solves my problem so much better immediately. It needs a lot of explanation and a lot of imagined problems that arise. Now, how has that helped in a way? And that's something that Nick Szabo, I think, realized pretty early, is that the initial adoption of Bitcoin is as a collectible. It's not as money. Bitcoin is a digital collectible. And there's something quite universal. It's not entirely universal, but it's a very common trait in human beings. We like to collect. And the things we like to collect and attach value to are things that are related to identity and meaning. So you have a lot of like collectors for even now fantasy worlds and universes, but also identity things like where you come from, the history behind it. That's all good stuff for collectibles. It's like you show you're part of a group or part of an identity. You can express yourself, but there's also something nice about collecting things, completing something. It seems a very human urge, and we can see that every year. I'm surprised that they still have the Panini stickers at school, like I had them in school, and still everyone, almost everyone, engages in those things. So it seems to be a pretty common thing. And of course, it's the same thing. Why is it the Panini stickers of soccer clubs that's more appealing than Panini stickers of whatever other thing, of furniture or or lakes? I don't know. It's related to our group thing, identity thing, expressing yourself, your identity, and then a common reference frame, of course, within the people you care about communicating with. Um, and that's that was a good thing for Bitcoin, and it still is a good thing. That from the very realist economist point of view, which always seems a bit cynical, it's like, let's say, of course, most Bitcoin education is not really education in the true sense. It's, I would rather call it a kind of propaganda in passing on something, passing on ideas, passing on that identity. But this approach to also how Austrian economics usually is perceived by Bitcoiners, I'd say it's not the original tradition. It was very like realist, more scientific. It's a bit more normative way of like what's good, a good economy, what's money, what's the bad ideas that help you a lot to find what is good. Usually it's the negative ways, like what are the stupid ideas, what are the harmful ideas. A lot is about that. Very judgmental about ideas and people pursuing them. But that has been quite useful in forming a kind of underlying minimum demand of the conviction bias, which is great. It's great to have an asset that also works as a digital collectible. And I always say if Bitcoin loses its moneyness, which it has in a surprising way, again, if you start with the very low expectations of the realist economist, it's a surprising story. It's amazing. I mean, no other asset has shown this stark increase in moneyness in such a short time. So that I have to give Bitcoin that's unique. That had increased my interest over time, of course, and my sympathy and in a sense conviction about it. But it's got a long way to go, of course, in that moneyness. It's nowhere near anything that really facilitates a medium of exchange, communication with people you don't already trust. So there's a lot of potential and upside still there. But it's a good start if that conviction group increases. And of course, what helps Bitcoin is it's a quite abstract thing in a sense. It is not loaded by a lot of political assumptions or identity assumptions. It's not linked to one ethnicity or race or continent. It's a quite abstract digital thing. that can be quite universal in its appeal, that has the possibility, that has shown that has reached in any corner of the world. You can find Bitcoiners these days, and the diversity of Bitcoiners has increased a lot. In the early days, it was just nerdy male libertarians, more or less. That has become much broader, but of course, in a sense, that broadening of this conviction base, I think, is an interesting and important economic element, because for now and for a long time, it's for an economist, I think, would be stupid to assume that the minimum price, and most economists still assume the natural price or the long-term price of it would be zero. Like there would be zero demand if whatever happened to Bitcoin or was. And most economists would assume that once it's revealed that it hasn't got this moneyness, and if you have this empty thing of moneyness because it has moneyness, and that just means it's marketable because you think it's marketable. It means you buy it because you think other people will buy it. It's not entirely flawed. It just describes a network effect. But it has the Ponzi-ness in it. It sounds, for most people, if you don't get it, it sounds like a Ponzi scheme. It's like you buy something because everyone else buys it. And that's the reason you buy it. And it really depends on everyone else buying it. And if you now read on the news, Michael Saylor has sold Bitcoin, then of course you gotta sell your Bitcoin, like the deepest conviction buyer has sold it. And then many economists will tell you, well, the natural price it will reach pretty soon is zero. Like once you realize this chain is broken, then it's going to go to zero. And that, I think, is bad economics, or it's wrong. I don't see that in any way plausible. But of course, it explains a lot of the volatility and the 50% correction, the least, and the 80% correction. It's a discovery process. That means there's a lot of uncertainty. There's no true price of Bitcoin. And then conviction in the conviction of other people is something that's hugely mimetic. That means it's fragile. It's linked to what you expect other people to expect about yourself, more or less. And it's this fragility, of course, that leads to quite stark and drastic price reactions. Like when you lose your conviction, it's always the bear market, where lots of even like long-time Bitcoiners start to lose conviction. It's like they ask themselves, okay, have I been, even Michael Saylor, like, what have I not seen? Maybe I was in a bubble. Maybe it's really not money. Maybe the economists are right. It's all that we always have that in the bear market, the flushing out of the recently convinced, but not deeply enough convinced people that lose their conviction, and that's quite natural. In a sense, yeah, that's problematic about Bitcoin, but it's not so unique. So it would be very stupid to assume that Bitcoin, in a sense, is unique in that thing. It's very typical. Network effects always have that kind of fragility, and the whole market for investable assets has, of course, the very same pattern. The most conservative asset these days is index funds, and index funds are literally defined by things are in the index that most people buy, and most people buy them because they are part of the index. So that's entirely the definition of an index fund. It's you buy what other people buy, and because they buy it, it's part of the index, part of the like S&P 500 or so. It's the 500 most bought stocks by other people. So really, the only reason a stock is part of the index and you need to buy it is because other people are buying it, which, of course, is the very same Ponzi-like scheme. It's not entirely Ponzi because it's network effect. And the network effect has positive value, but it has the most positive value not for the share of a stock, of course. It has the crucially positive value for anything that comes closer to moneyness, that could link other people. Their network effect is really a value, right? So if you attack Bitcoin for being a Ponzi scheme, it's a bit unfair because it's Ponzi's all around. And that part that's Ponzi-like about Bitcoin, at least, is part of its road to more moneyness and would still be useful for this network effect, which by other people just buying the stock is only useful for the company that can raise money more easily, but it doesn't have a societal benefit of everyone buying the same stock. Whereas with something that has moneyness, at least for some people, in some places, in some contexts, would have increased social utility just for these kind of network effects. Lisa, thank you for breaking the
Yes,
ice.
I thought now that we're
That was
talking
really
about Ponzi's and network effects. So, if you had to speak to a very skeptic person not knowing anything about Austrian economics or Bitcoin, how would you then describe the difference between Ponzi and network effects? Where do you draw the line?
Yeah, that's a very good question, very difficult to draw. Now, the Ponzi effect has an economic side and a normative side. Yeah. And the economic side of like you get new investors to pay back old investors kind of thing is not that unusual, and it's not always malicious in intent. It's the way some companies are financed, and in particular, if they go to the market, if they can be public and they can emit new shares, in a way, it has that economic side of the Ponzi-ness thing in it. It has a kind of negative connotation because in the history, we've seen a cyclical phenomena where this mimetic effect of other people buy what other people are buying is not accessible to everyone. And we've seen how it's part of the Cantillon effect and part of the business cycle. That's also to the understanding of the Austrian school is that's due to distortion of money. So monetary distortions lead to an increased appearance of these wrong and unsustainable network effects that are asymmetric because they have smart money and dumb money. And it's a very cynical way to look at things. It's like you push a lot of people into dump money because they need to speculate, which they aren't meant to do and can't do because you degrade your money. You have a lot of dumb speculators, not because they're stupid, it's because it's not their profession, not their talent. They don't want to. They feel like they have to. And then you have the smart money, which isn't really smart, but is part of a cartel and part of the early recipients of new money to the Cantillon effect. And they are early in many things and dump. So the dump money is exit liquidity for the seemingly smart money. It does not refer at all to intelligence. It refers a lot to these unjust distortions that are linked to monetary and financial system. And then there's a normative thing as well. Of course, you can understand those dynamics and abuse them by understanding or at least being rationally ignorant in a way you shouldn't be. It's like it's to your benefit. I don't want to even know. I just feel I make good money with the commissions by selling onto the kind, it's called the shoe shining boy effect in economics, to people that are closer and closer to the bottom of a pyramid. And the shoe shining boy story comes from, I think, a former US president getting stock tips from his shoe shining boy. So that the boy cleaning the shoes, that was a service in the past. And then he realized immediately, sell all the stocks because no one is going to buy from the shoe shining boy. He's the last in the Cantillon pyramid, more or less. And if he's now buying stocks, I know there's exit liquidity. It's like the final thing. And that's, in a way, it makes you cynical. And that's, I think, so the Ponzi, in the way I perceive it, it has need to have some malicious intent as well, or like a very egoistic perspective on the world where you see, I'm not bad. It's just very useful for me. And I don't want to hear your perspective and your problems. Yeah. You do it voluntarily. You want to speculate in stuff. I give you stuff. What's the issue? Yeah. Whereas a more principled person would say, come on, come on. I mean, you can't be serious. Like the shoe shiny boy buying stock in a highly speculative uh, uh, venture that you know won't bring any cash flow soon, but is only surviving because you know it's a structural distribution. It's a pyramidal thing where lots of people get commissions. Come on, I mean, be honest about yourself. That I would call a Ponzi scheme. So Bitcoin doesn't have that. I don't see, and you see that from Bitcoiners that do Bitcoin education. It's like if they had like this structural distribution, um, it's not entirely free of it, but a lot of it I don't see like because you could say the Bitcoin influencers get money from Bitcoin exchanges, but it's not that clear cut that way. There's a lot of conviction and a lot of the influencer thing I'm highly skeptical about as well. But it comes from a very natural human tendency. Is attention is a network has a network effect. So attention itself is a kind of Ponzi. So of course you give more attention to people that already have attention because all our intuitive heuristics through evolution, how we developed, are linked on the confirmation bias of other people. That makes this kind of influence economy possible. If it was just structural distribution, like you would see that influencers are only there because they make money. No one else makes money. And they only make money because they sell you expensive Bitcoin. And we've seen those things. There was in crypto in particular, you see those things. And it's pretty clear when you look at the structure, it's entirely clear it's a Ponzi. And of course, those people, when you get them, they end up in prison because obviously it's even against the law, which usually is a very small part of what's immoral and a very big thing that's moral but not legal. But even there, it's so obvious that even government realizes it's bad, and you gotta lock up these people. So I'd say no, it's not Ponzi, but there is a crucial part in Ponziness, and that's network effect, and that you can distinguish because we don't know. There's always uncertainty, and it's a lot of it. Of course, if no one cared about Bitcoin but me, it could still be like an interesting technology. But of course, it won't pass on. And of course, in a sense, it depends. And of course, if the bear market is just the time when there's a lot of bad news around you and the conviction fades. And of course, we look at other people and our conviction fades as well. It's very natural. And the same in the bull market, of course, when the million Bitcoin seems like so close, and all the experts and all the influencers tell you it's like the million next, and the Omega candle and so on. Everyone is just high of expectation and FOMO. Yeah, it's network effect of attention, positive confirmation, and it increases a bit the volatility. But the main reason behind it is more structural. It's not Bitcoin's fault. It's in a sense, it has this advantage of unlimited upside, as it can be valued, which is good. You can't like put an objective thing and say, oh, it can never be more than that because you need that energy to produce Bitcoin. That's why that's, of course, all bullshit, or that's economists that have no clue about Bitcoin. They tell you how like the energy cost is the cost of producing Bitcoin. That's nonsense. So there's no way of pricing it. That's very old economic illusions that the Austrian school fought against, or early is the objective theory of value. And of course, some Bitcoiners, when it helps their cause, tend to slip into these errors. It's like, oh, it's got to be value because it's energy-backed currency, or that kind of stuff. That's nonsense. That's not true. Economically, energy plays an important role. It plays an important role in having an algorithmically ascertained increasing marginal cost of supply. That's a genius use of technology and energy, and the unfakeable scarcity of real energy. But it's is in no way backed by energy and doesn't explain its price or its valuation. Okay. Any other questions or challenges?
Yes, I have questions.
Yeah, who is that? Johan?
Yeah, the camera is not coming on. Let's see. Oh, now it's coming.
Hi.
Um, First, where do you see Bitcoin the next 10, 20 years? Like going like really like number wise, of course. Nobody asked it yet.
Nice.
and um, and how do you see like I mean, we started with a lot of ideals, and of course it was unrealistic from the beginning. This narrative now having it so integrated in the financial system, um, how do you perceive that? So maybe we start with that, and
Mhm.
then
Yeah.
later on the first question.
Uh, Price-wise, it's still from the economist point of view, if it's an asset that's location independent and still transferable and fairly uncensorable, I still see most of the upside in the future. So I'd imagine quite high prices in Swiss francs or euro. But that, of course, doesn't mean in the sense that's just a number go up optimism. It could very well be that 1 million francs per Bitcoin, but you wouldn't feel so happy about it because 1 million francs doesn't buy that much anymore. Or maybe it's more with the $1 million price expectations. Of course, one reason why this number might go up a lot is the ongoing devaluation of currencies. So it's very, very hard to perceive what it means. And most people are tricked by it. Like you think, okay, in 10 years from now, it'll be 1 million and it'll be huge and it will be all, everyone will be convinced that we were right. No, that's not entirely clear. It could be like 10 years from now. If you calculate it down, like in the percentages per year and the devaluation and the change in the geopolitical situation and the macroeconomics until then, it could just be that a non-news. It's like nothing surprising. It's like, of course, it's 1 million, but it's still speculative, and I still wouldn't buy it, and it still seems expensive, and it still seems like it has failed, and so I don't think it'll change that much because, let's be honest, 100K was so entirely unimaginable, and when it was there, it felt like okay. Now it's 100K. So what, in a way, it's a bit disappointing, and what it actually means, and the kind of moneyness and change of the world and so on. And you couldn't be entirely sure if it's just like, what would it mean if the Trump coin would be at $10 and wouldn't mean much as like a fluctuation in the time frame. That was the first part of your questions, which I tried to evade as elegantly as possible. And what's the second part? Can I help me again, Johan?
That was the second. Oh yes, it was like in the beginning there was a lot of idealism, and it's still
Yeah.
in the Bitcoin scene,
Yes.
in the Bitcoin scene itself.
Yeah.
But let's say the least, let's say 2-3 years, you have the strong adoption, and
Yes.
in it gets basically like, let's say, how to describe it, like enveloped in the financial system, kind of. And
Yeah.
so, how do you perceive that?
Yes.
I mean, like
Yeah.
I'm a
Yeah.
bit like wary about that. I don't really know. Is that
Yeah.
so good? Is
Yeah.
that really
Yeah.
bad? It's just
Mhm.
as it is.
Yeah. It's frustrating, but I would only be frustrated if I had not experienced the internet and the adoption of the internet from very early on. I was also a very early internet user. And that's always for me the best comparison, Bitcoin to internet, as a similar kind of protocol technology. And if you look at the idealism of the early proponents of the internet, what we expected it to become and be is like open global information layer. And then you look at the reality of social media, corporate control, government censored, bullshit factories, yeah, then of course it's hugely frustrating. I remember, was it 20 years ago, we were all like already frustrated with the internet is for porn, the meme, like internet is for porn, because we realized, oh wow, okay, the biggest interest and driver of bandwidth was really porn. And of course not because there's this more moral panic about porn. It's because it puts into perspective what is of existential value to people, and how this like free private exchange is a niche interest. And that's the same with Bitcoin, that it's private and you can keep it in self-custody. It's like, for us, it's a feature. It's like, come on. For most people, it's like a bug. It's like, oh, what happens if I lose my keys? And oh, that's difficult. It's complicated. I need to pay someone to hold my hand to do that. Oh, great. There's a bank that's offering it, so I don't have to worry about it. Fantastic. Finally, I can buy an ETF with it. That's very frustrating, but it's not, for me, it's not a frustration.
Yes and no, Rahim, because like
nature.
you need to cater to those people, because
yes, exactly.
It will take 10 years or a lifetime to be ready to self custody, and that's impossible for them. They just built another way. So that's in the comparison, like it would be even in favor of Bitcoin, because you know what I mean. If you compare it to the internet.
That's also my point. So I would even turn it around and say, the more frustrating it feels to the early Bitcoiners, the bigger the sign of adoption, because that means a broader population is adopting it. And of course, they're adopting it for ways where you say, oh, come on, it's like you could have that already with fiat. It's just another number go up ETF speculative thing. But that's what adoption looks like. And if Bitcoin survives that, that's good for Bitcoin. And the likelihood of it surviving
that's very high.
Is
very high.
relatively high. So I'd be still quite optimistic. But of course, the danger is always if then the frustration comes from an unrealistic, too high utopian perception. And that's what I think is the danger of what I mean with Bitcoiners getting wrong about Bitcoin. Because then you lose conviction without reason. It's like, oh, Bitcoin has failed me because now my neighbor is into Bitcoin, but he's only into Bitcoin because his bank has suggested that he try out this very new crypto ETF that has 30% Bitcoin in it or something like that. And then it feels like it goes against everything it should stand for. But I think they'll be wrong. And the realist perspective will put that away in perspective.
There was another question. May I ask, or later on I ask another question?
Yeah, Thomas.
Because Thomas has
his question.
Thank you.
Now I don't hear you.
We cannot hear you. The joy of using Jitsi.
Can you hear me now?
Yeah.
Yeah, I'm there. You said Bitcoin does not have enough moneyness yet to be called money because it's no medium of exchange among strangers. But what would be your benchmark or your threshold? At what point would you say now it has reached enough moneyness? So I would call it real money.
Oh, I wouldn't. I'd say no, money doesn't exist as a thing. It's always differing degrees of moneyness, and they are always subjective and at the margin. So what for some people can have more moneyness can have less moneyness for other people. But one important thing is also its adoption in different indirect place. And so probably one economic misunderstanding that a lot of Bitcoiners tend to have is to perceive this 21 million as a kind of the just limitation of everything money. So, and then it's like 21 million divided by infinity, or no, it's infinity divided by 21 million. I don't even get the meme right. That I think is wrong. because there are a lot of layers. So if you look at the gold standard in its best form, which is the oldest form that most people don't refer to when they call it the gold standard, is like the physical coin with its weight and fineness played a relatively small part in transactions. Because once you develop an economy, of course, the settlement is not always immediate. And trust plays a role because you don't need trust in the settlement layer. Then that allows you to have more trust in other relations, in joint businesses, in credit contracts, in delivery contracts, in the bills of exchange model that was used widely in trade finance. So there are a lot of things that have moneyness, even if there is something that's very good as the base settlement layer. And that's something I share with a lot of economists of the Austrian school. Is that inside it would be great to have a settlement layer money for foreigners that does not depend on one institution and cannot be manipulated by authorities. That's good because it's just, it's more just, because you'd always have the problem of some interest group having more influence on the assayer, on the judge of the settlement money. So it would be great if the settlement money would not necessitate any other trust or identity or institutional layer. And that's really the crucial thing, what seemed to make be preferential about the original gold standard that the northern Italian merchant discovered, that by defining a settlement standard just in weight and fineness takes away all arbitrary definition power of institutions and authorities. And that was really breaking free. It did not mean that the gold coin, the florin, circulated a lot in exchange, that it was like universally accepted medium of exchange so that people would buy bread or coffee. That's the famous example for Bitcoin. So little people buy coffee with Bitcoin. Very few people bought coffee with florin. They settled big coffee deals in the trade fair cities in gold coin. But no one bought coffee with gold coin. So you had a lot of things that had moneyness. So for some people that take a more active role to investment, that are more entrepreneurial, for them part of their wealth is not only the liquid settlement layer money that they need to have a stock of liquid settlement layer money because they need to settle. And if you have nothing of that, you're very close to being insolvent, because things can always happen. So you should have a kind of buffer of liquidity. It's something that Michael Saylor now seems to realize belatedly, that you need some liquidity buffers. And then company shares can be part of your wealth, but of course they're fluctuating a lot. Credit contracts can be part of your wealth, and they fluctuate much less than shares. They are different instruments, and they react very critically to interest rates, and those are very complex prices within a society. In Switzerland and Germany, a large part of the moneyness is in real estate. It's like the main way how middle class people passed on wealth to the next generation, and somehow live off in old age. It's real estate. So it has the moneyness. Bitcoin won't absorb all real estate. It may absorb some of the moneyness, and that's the reason why it has so much upside, because if you look at how big real estate is and how small Bitcoin is, it puts it a lot into a relation. But it would be entirely fallacious to think that everything money will be in 21 million Bitcoin, and there'll be the utopia of extra cars, ultrasound money. That's not the way it works. It could be that more and more people trust a neutral, uncensorable settlement layer for contracts to then build more contracts on top of that settlement layer, again, between people that wouldn't trust contracts as they are done now, because they usually mean you have like one reference frame to one fiat legislation, and you wouldn't deal complex things with people you don't know in countries you don't know. You can't even get a credit financing for another country, for a house in another country. So it shows you how limited transactions are actually. And that has unfortunately happened a lot. So there's a big gap in trade finance because of that problem. It's either big banks that are not very innovative, but the middle has disappeared, that someone would finance a business that's not a publicly tradable share in the US stock exchange across borders has become very unlikely and makes it very difficult to finance. So everyone has to go for the equity route, which of course has bad incentives and leads to a lot of regulation that again make it impossible for anyone who's not rich already to become rich, because you have to show that you're rich to be allowed deals that are interesting and so on. So that's a bit of an issue, but I have digressed a lot. Sorry, Thomas.
If I may connect a question to that, one element of the moneyness is its fungibility. And I remember you saying in a different context that you were most afraid, or not afraid, that you thought Bitcoin might fail because of its lack of fungibility. If I remember correctly, especially because there's maybe a KYC state Bitcoin and a non-KYC Bitcoin, and they won't be interchangeable and not interchangeable into other assets. But where are we standing on that matter? Do you still think this is the biggest threat?
Yes, I still think that. And of course, I would have predicted a long time ago that the threat may be a killer threat. But I'm surprised that again and again, it seems on the surface of things that the fungibility goes down a lot. Now we have almost, I mean, it's dystopian surveillance in the EU and a lot of countries that go along. So Switzerland does a lot of it as well. It's like direct communication immediately to the authorities. Every transaction they can track through institutions for regulated exchanges. Yeah. That of course makes it more difficult to have this split between non-KYC, KYC Bitcoin, but also it increases the value of the non-KYC Bitcoin a lot. So that's the good thing about economics, and that's the reason for this optimism of the Austrian school, that power can't always replace economic law. It's the law as people value subjectively, and they will avoid obstacles and they learn from obstacles because the obstacles don't change your preferences. They just change the price of you trying to achieve something. And that has worked out quite well in the past. So as always, every year I'm surprised by the new dystopian efforts at limiting the free exchange of all assets, including Bitcoin. And then I'm surprised again about the gaps that become possible, the large amount of people that care about those gaps, the infrastructure solutions that are offered by entrepreneurs that don't go the easy way, don't go the most investable way, but care about the technology. So it hasn't happened yet that you still can hold Bitcoin with a lot of privacy, with all the possibilities it had with much better infrastructure than in the past. So this option hasn't disappeared. And just that the majority of people are within the controlled, surveilled layer, it's not that important, because that the realistic perceptions over the minorities count for everything. It's the minorities that are important. If the minorities don't have their way, then that would be death sentence. If most people want to use it like they use a bank account, that's fine. That's most people. The crucial is like the exit option for the small minority. And Bitcoin still works this way, and against all odds. And I expect it to work even next year, when the authorities from the 1st of January immediately be informed whenever you buy and sell Bitcoin on a regulated exchange. Lisa.
Good. There is a question in the chat about the title. So when you chose the title, what did Bitcoiners get wrong about Bitcoin? Whether you meant that provocatively, or if there is a certain assumption that you want to focus on. And from my understanding, you focused on several misconceptions tonight. So this was like treating Bitcoin as already perfect money, then thinking that security alone creates value, the whole idea about energy-backed story, and also the 21 million divided by everyone math, and then waiting for this one magic threshold where it becomes real money. So do you think that they all come back to the same root, that everyone just expects this perfect money? Or what would you say is the gist of your speech tonight? What do we all get wrong?
Well, I feel a bit sorry about Peter who asked the question, because it was like at the end of the lecture, he asked if he shouldn't have keep watching football. And if he has to ask that now, then I'm really feeling bad for him. I hope at least on the side you can watch a little bit of the soccer match you're missing. But yeah, I hope you're partly kidding as well. So maybe one. I think a lot it doesn't have all one common root, but the largest overlap in the common root is our evolutionary way how we think, and it's quite tribal usually. So we tend to look at things in a tribal way, I'd say, identity linked, and that lends itself to utopian thinking and to normative thinking. It's like, I know what's good and just. I define it as the ideal state, and I compare the world against this ideal state. That's, the economists sometimes call it nirvana fallacy. It's like you can't compare to an ideal state. Um, and then the bad thing is you retreat from reality, and if someone makes you retreat from reality, it's not useful. I'm very pragmatic, then it's not useful. A lot of Austrian economics is not useful if it makes you retreat from reality. It's a kind of like fantasy world of the perfect economic system, if everything will work out, if people were good, kind of thing. I would advise, I think it's a nice intellectual adventure. And Hayek realized that. He said that you will reach more people if you get the power of utopian thinking. I totally understand that. I get that. It's just that's not the perception of the economist, but that's a very niche interest. Most people wouldn't care about the kind of cynical sounding, down to earth kind of way. We want to engage in thought experiments. We want to think about what's just and unjust, what's good and bad. We want orientation, guidance. We want guidance from people that are already the most just and good and express the idea of the good the best way, which enhances this kind of influence, guru kind economy. And I find that's not very useful. It's good entertainment, and it's lightening the spirit sometimes, but I think it always has the price of then losing your conviction when you run against reality, because then you're frustrated too easily if you already have this high benchmark of, but we are the good and no one gets it and they're all stupid out there. And then what I really dislike is you will retreat from realities. Like you feel like, and a lot of Bitcoiners do that, they feel like, oh, I can't do anything meaningful in this world anymore. Until we have perfect a Bitcoin standard, nothing feels meaningful anymore. I have to quit my job. I won't start a company. I won't do anything but wait for the deliverance by when Michael Saylor finally, or whatever happens, or people finally, or everyone watches the same podcast and agrees that it's the perfect money. That I find very dangerous and not useful, and that I think is an error. But it's a very excusable one. It's not limited to Bitcoiners, so that would be wrong if the mainstream like blames Bitcoin for being a cult. I always find that it's very dishonest, because everything is a cult. Like that's how human beings work, and mainstream thinking, this kind of statist underpinning of how things work and are supposed to work, is obviously a terribly dangerous and a cult where you can, from the history of ideas, show exactly how it derives from heretical thought. It's entirely clear that it's a heretical cult line of thinking that led to what's now perceived as in politics and economics as the standard thought model. So I'd excuse it, but again, from the individual sovereign point of view, I think you will want to know what are common errors and assumptions. And I think also in Bitcoin adoption, this idea of the circular economy is an economic mistake. It's not a thought mistake in the sense that it's true. Uh, Linking people or one base to link people in an exchange is identity linked. That helps it. It's always easier if people trust each other more to have exchange, and exchange is good, and cooperation is good. So there's nothing bad about finding a kind of common ground, identity, liking, we care about the same place. That's why you want to buy from this farmer who's your neighbor, kind of thing. That's all nice and kind. From the economic point of view, it's a mistake because it limits the main driving force of the market. That's division of labor between foreigners that don't trust each other. So if you think like the Bitcoin will fulfill its potential when within a village the people trade in Bitcoin, that's I think an illusion and quite dangerous. It has a value by itself, but it's not the driving force of Bitcoin adoption as money. Money comes in when you bring wealth from the outside to a village, when you invest in a village, when you have people that who are not the neighbor of the farmer, but invest in a technology that allows the farmer to be more productive and reach markets outside of his village, which lead to him having a more sustainable life in a modern economy. Otherwise, being a village farmer can be a lot like gardening, which means it's an expensive hobby. And that could lead to people be entirely dependent on subsidies. And it could be private subsidies as well, but that's not very sustainable. If it's the ongoing charity of Bitcoiners, they always overprice and cover everything. And that's the reason why you have this adoption. And I'd say, wow, be very careful. That's not very sustainable because once this rich Bitcoiner leaves the place, that's always making up for everything, it'll fade away. And or it's hijacked, of course, by politics again, which has happened, where you're impatient and you see, wow, it would be so great. Like we already have free farmers onboarded, and if every farmer in the country would, and then it'll be like, wow, then it's limiting this bottom-up discovery process that can only come through mutual increased value, win-win. So you get more than you expected. Yeah. Of course, it's nice to overpay a farmer that you have a relation with, and there's nothing bad about it. It's very nice, but it's not the thing that entices foreigners to cooperate. Foreigners only cooperate if they see value for themselves. They say, okay, yeah, that's my end. You may be a nice person. I'm a nice person as well. I have a family to feed. What's our win-win relation? How does Bitcoin help me find that or link to that? Otherwise, it always feels like charity. Nothing bad about charity. It's great, but charity comes from wealth. Charity does not create wealth. That's the problem. Charity comes from wealth, but it needs we have wealth first for charity to emerge. And Bitcoin charity has been very important, and I respect the people a lot that even though it's very early for Bitcoin, they still reach this kind of level where they feel, okay, I think I'm safe materially. Now I can do something outside of my family sphere and myself and push something on that I think is good and invest in things that won't bring me a return, but maybe very long term for the people around or other people or society. That's an amazing mindset, but it's a mindset that comes from abundance and not from scarcity and doesn't help you out of scarcity.
Mm-hmm. All right, thank you so much, Rahim. That was very rich session. I think I have about 5 follow-up questions. However, we are already 15 minutes over time. So I would suggest to conclude the session here. I will share the recording in both Telegram groups, and I think it would be very nice to continue the discussion there. I think I will certainly post another 1-2 questions that I have for you. So it would be lovely if we can keep the discussion going there. And to everyone listening in, if you are not a member yet of the Bitcoin Association Switzerland, consider joining it's only 21 Swiss francs per year, and you will be supporting a great association. So with that, thanks everyone for your attention, and Rahim for your thoughts. I mean, honestly, that could have gone on very long. It's very complex, very nuanced. However, it was really nice to get a peek inside of your thinking process. So thanks a lot for that.
Thank you.
Bye, everyone.
Bye.